I have Chicago Fed President Austan Goolsbee here with me. Hey, Austan.
Great to see you again, Steve.
So, with just a little more than 24 hours since the PCE inflation numbers yesterday, some people ready to just throw it in, say inflation's reaccelerating. Other people say it's just an anomaly. Where do you come down?
I always say 1 month is no months. You know, it wasn't a great month, but it was showing something quite different than the previous 7 months in a row. So we're just going to have to keep watching the inflation. I wouldn't be surprised if we found out there was a lot of noise component in it. But if we get multiple more months, especially on the housing side, that's the thing that's really been weird. I mean, the goods inflation is back down to where it was pre-pandemic. Services inflation, which we always think is a little stickier, has actually come down over a longer run period. And the thing that we got to keep an eye on, because we don't fully understand why it hasn't dropped more, is the housing side. And
what do you do with that? We have these other private sector reports that show market rents are coming down. Is there some anomaly why it's not showing up in the?
I don't totally. I mean, in a way, I thought that mechanical. Hey, it's just how the data are computed. I've been saying that for some months. So every month that goes by that it still doesn't start matching to the market's data, I got to reevaluate a little bit what I think. But I still think mostly it is going. I think we're on this path that. If just look over the last 7 months, inflation has definitely improved. 2023 was one of the biggest drops in core inflation that we've seen in modern memory.
When you see something like the January data, does it change your outlook on monetary policy and the outlook for policy?
I mean, the monetary policy, we're data dependent. And so if the data start changing on a trend basis, it's got to change your thinking. But 1 month, it's no months. I mean, you definitely should be careful over-indexing on one data point, especially if it's in January when they're rebalancing things. I kind of think part of what this is the CNBC time and FOMC time. Those are on different time scales, and so it's the FOMC measures of. Are we getting on path to get inflation down to target? That's measured over months, not minutes. And we got a little bit of that.
I'm not going to quote the famous phrase, which is that the long term is made up of a whole lot of short terms, but we'll leave it there. Well, I'll take that criticism. Fair enough. Here's the thing, though.
It was just an observation.
No, fair
not
enough.
A criticism.
Fair enough. I agree. But the question I have is whether or not you think we may have played through all of that supply side improvement that we had in the inflation numbers, and the 24 is a year of less progress because that process has played out.
Yeah, look, this is a critical issue. So there's one worldview, let's call it, that you can look at 23 and say, yes, we had great GDP growth and unemployment didn't go up much, while simultaneously inflation came way down, but that just because the supply chain was healing and it's not going to heal again. My take on that is we learned on the way up that inflation was more persistent from negative supply shocks because they spill over from one industry to the next industry to the next. And maybe that same dynamic would work this way as you got improvement. So the New York Fed's measure of supply chain index is now back to zero, is now back to where it was pre-pandemic. But the impact of that is not instantaneous. I still think there is quite a possibility that it could flow through. And part of the supply shock is on labor supply. You're seeing labor force participation much higher than where was expected to be right now. And we know that the lag on wage effects is longer even than on prices in the supply chain.